Boom. What's up, you guys? It's Royce Jacob, and welcome back to the channel. In this video, we're going to be talking about Bitcoin and why it's fallen to its lowest level in nearly 2 months. Summertime's here, you guys. The summertime lull is very real. The markets have been very stagnant lately, and this is really the first exciting price action we've seen in quite a few weeks. Unfortunately, it's to the downside. Unfortunately, this is looking pretty bad from a technical perspective, which is why I do want to jump into the charts with you guys and talk about both the bear scenario and hopefully the bull scenario that could potentially play out from here. Okay, so we will, of course, take a look at Bitcoin. We'll kick it off by reading over this, just go over some macro really quickly. On the note of macro, I do want to reference the newsletter that I sent out yesterday where we covered the DXY, which is the US dollar index, because this does paint a slightly brighter, more optimistic picture as to why this could in fact be a bear trap as opposed to a reversal of trend to the downside. So we'll discuss that a little bit. Again, we'll talk about the Fed and inflation. I'll give you guys my brief thoughts there. And at the end of the video, we'll also take a look at good old Riot Platforms, down double-digit percentages as we speak, which you always hate to see, but that's the game we play. And again, I'll talk to you guys about both the bull and bear scenarios for Riot as well. So that said, let's get to reading. Please let me know in the comments, you guys. Are you still trading Bitcoin? Are you still excited about the markets? Has it been an active summer for you? Because, man, I mean, you guys know I'm not a day trader. I'm fairly active in option swing trading. But for everybody, you guys, the summertime lull is real. Summertime sadness in a sense, as far as the stock market's concerned, at least. Hopefully there's no summertime sadness in your, day-to-day lives. But because the markets are just slow in summer, people are chilling, school, not that school kids are trading a whole lot or adding a whole lot of volume to the markets, but it's just summertime. And these are historically slow months for equities as well. Like the S&P 500, August and September, historically speaking, are some of the worst performing months over the past recorded history of the S&P 500. So it only makes sense that that translates to pretty much every other aspect of the financial markets as well. So just keep that in mind, you guys. I do think that this will, I know for a fact at some point this will subside, but I do think that we recover definitely by October. And that's why I got the little Halloween marker right there, because I do think by then we'll definitely be recovering into the holiday season. Okay, so I'll just say that right up front. Anyway, Bitcoin falls to lowest level in nearly 2 months after Fed minutes dial up inflation concerns. The slide began after the minutes of the Federal Reserve's July policy meeting were released on Wednesday. Earlier Thursday, it fell to 27.8, which is its lowest level since June 2020. And right now, it's all about that same level right now. Okay, so the Fed minutes cautioned that Fed officials see upside risks to inflation that could potentially lead to more rate hikes. At that meeting, Fed raised its benchmark interest rate to the highest in more than 22 years. Markets have been betting the central bank wouldn't make any more moves on interest rates this year. In reaction, the stock market fell for a second straight day. Wednesday, and the 10-year U.S. Treasury yield hit its highest close since 2008. Okay, so aside from the DXY, which I do want to cover now prior to diving into the charts, I will say that the next likely macro catalyst, fundamental catalyst to pick Bitcoin up from where it is now is going to be a statement from the Fed, which they're probably not going to make, you guys. I talked about this in the newsletter, yesterday's newsletter as well, after this was released. I don't think the Fed's going to raise interest rates again. I think they're saying that to keep the markets at bay. I think they don't want the markets to rip because ultimately that kind of backsteps on their goal of combating inflation when the markets are going up. So I think they're bluffing personally. Again, that's just my belief. I'm willing to call their bluff personally in my portfolio. Again, all of you riding the waves with me right now. Unfortunately, they're kind of bloody waves, but again, you guys, that's just a matter of summer. Thankfully, we have some plays that are doing really well. I'll mention those in a second. But again, you guys, this is the nature of the markets right now. Interest rates are still really high, but ultimately the markets have rallied pretty significantly as well. So the Fed, once again, is trying to portray a hawkish or bearish tone in order to kind of mitigate the gains that the market's going to see, because once again, that negates the efforts they're making to combat inflation. Okay, so again, I'm calling the Fed's bluff. I do think that the Fed will not raise interest rates, but unfortunately, I think it will take until their next meeting, which is next month, which is in September, to really bring light on this and really know for sure that they're not going to raise rates again, and then the market can rip. So honestly, August, my hopes aren't too high for the remainder of August, but I do think that into September, we do make a comeback if we don't make it by late August. The day of recording is August 17th. So a couple weeks, I think we should be on our way back. Short term, it's not looking too good. So we'll talk about Bitcoin. Just rip off the Band-Aid, talk about this bearish scenario. And then once again, I do want to hop into the dollar index. Okay. So before we do that, you guys, I do just want to mention the fact that there are more plays out there than crypto, obviously. But I mean, right now, as I record this, Weight Watchers, which has been our number one play over at Waves Capital for months now. And it's been a roller coaster, but I can confidently say that Weight Watchers has probably outperformed 99% of the greater markets. And Novo Nordisk has done very well for us as well. So these two stocks, to just be transparent, are the two largest holdings in my call options portfolio. And thankfully, again, you guys, that's why diversification is important. No matter how bullish you may be on Riot or the crypto space, you need to diversify, okay? And if you want to know exactly how I'm diversifying my portfolio, if you want to know how I'm trading Riot on a day-to-day basis, or all the stocks we talk about all the time, C3 AI. I just bought up a bunch of call options on C3 AI right before I sat down to record this. So if you guys want to know when I'm sharking up calls, when I'm taking profits, when I'm cutting losses, it's the first link in the description box below. My complete portfolio and daily newsletter. You get everything that this box here entails for $50 a month or $40 for every 3 months. But as always, I recommend that you try it free for 7 days. The reason I have a free trial is because I'm so confident in the product that I provide. So try it free for 7 days. You can always just unsubscribe. It's easy as clicking a button. So give it a shot. Join Waves Capital. Come ride the waves. Again, it's a little flat right now, but they will be coming, at least in my opinion. And as always, you guys, my money is where my mouth is. If you have been riding the baby waves with me lately, if you've just been cruising with me over the course of the summer, please share your experience in the comments. Even if it's not a good experience, that's okay. You can share your experience down there. But just let potential riders know what we got going over there. So I appreciate all of you, and again, look forward to seeing you guys in Waves Cap. Let's get to reading. Again, we'll talk about the downside here, and then we'll cover the Dixie. All right. So bad news, bears. This is very, very technically bearish. Bitcoin, let's just keep that in there for aesthetic purposes. Bitcoin has been in this very clear ascending channel since you could say the top line of resistance kicked off at the high we saw in January of 2023 and January of this year. Saw that nice rally, ripped above 20K for the first time, kind of held around there, came down, saw its first real correction in the month of March, creating the first touch point on the baseline of support. You can see there's a very significant line of resistance going up here. Notice how I'm not really going to reference this here, but I should say in this video, but I guess I will. The reason I don't like using the top line, like these candle wicks right here, you can see I go on the solid closures, especially on these daily candles. I don't use the top lines or the top of these candle wicks. And that's just because you want to front run competition. So this applies not only to Bitcoin, but this is how I pretty much draw trend lines on every single chart I do draw trend lines on, which is all of them, at least the ones that I'm trading. I would advise you to use candle wicks. The flat, I guess it's flat tops, I don't know what to call those, of candles, just the bottom ends of the top of the candle wicks to draw your trend lines. And same goes for like the bottom trend line. I drew this just to really secure it right here, but realistically, if I was drawing this trend line, it would be right here. So again, you guys, just better safe than sorry, and you always want to be one step ahead of the competition. So just a little PSA thrown in there right now. Anyway, Bitcoin has closed, I should say, within the next 4 hours. We have 4 hours left on this daily candle, and it's not looking too good for us, you guys. If Bitcoin does close the day, and you guys will know this by the time you're watching this video, go draw the trend line for yourself. It's super easy. But if Bitcoin does close this daily candle closure, if we see another daily candle pop out below this line of support, that would, in my mind, secure a reversal to the downside. And from there, the next level of support that I believe will come into play is this broken level of resistance. So TA 101, you guys. Prior resistance becomes new support, and new support becomes prior resistance. New highs are new lows, and new lows, new highs, vice versa. Okay, so this line of resistance was in play once from April 13th. If you guys remember when we were covering this, waiting forever for this thing to break up, from April 13th all the way to June 20th. Okay, so for over 2 months, broke out, really ripped up since then. We've been in that, again, summertime lull, summertime sideways movement. But now we have broken below that, and I do think that line of resistance, that span like 2 months, will come into play as new support. If this happens, that would take us down to, let's just play, a week from today. If the markets really start to fall, they'll probably fall pretty quickly. I do think it's possible that this happens within the next week or two. Again, maybe by September. Come September, I definitely think we'll start a recovery. But I do think that's, I'll say, the worst case scenario for Bitcoin. Best case scenario is we just stall out right here, and we'll talk about that right after, because it would create a new technical higher low. But again, just to close out this thought, worst case scenario, in my opinion, I always remember, you guys, it could get worse than this. Worst case scenario, in my eyes, is a retest of this line of broken resistance. Jesus, I do think this will come to play as new support, but I don't think we'll fall lower than that, if I'm just being completely honest, because the Bitcoin halving is next year, and it would be foolish, once again, in my opinion, to not be bullish on Bitcoin going into the year of the halving. So again, come fall, definitely winner, and almost 100% 2024. I think that Bitcoin will absolutely be picking up steam again and regain the overall macro upside trend. Okay, that's Bitcoin. Let's talk about the upside. I almost jumped in a Riot, his thought, but again, you guys, it's very possible this is a bear trap, or a bear trap, which is bullish. And I do think it's possible that, once again, we set this higher low right here. We're still technically setting in a higher low. As long as we're above like 24/7, 20, I would say 25, as long as we're above $25,000, $26,000, we're still setting in a technical higher low. This was barely a higher high, so maybe we'll just start a range, like start trading within a range until we start picking up steam again. But best case scenario for Bitcoin is that we reclaim this channel, and if we really start picking up steam into the fall winter months, that could potentially lead to a test of the top line of resistance on this channel, which, again, a lot of traders are going to be doing that, which is why I do that. Again, maybe it hits that top line. Maybe it hits the top line candle wick. Maybe it hits the candle wick top line of resistance. Some of this phrasing is just whack. But I do think that is possible. That is probably the most optimistic scenario that I can imagine. But it's Bitcoin. Anything's possible, again, especially heading into the year of the halving. And hey, maybe the Fed decides to pause and say they're looking towards cutting. If the Fed next month decides to pause interest rate hikes and really and even like signal potential cuts on the horizon, given some inflation data that's hopefully cool, then I could definitely see this potentially playing out into the month of October, November, December. Okay, so that's Bitcoin, you guys. I do want to just quickly read over this, just because it's important to understand macro regardless of what you're trading. So the rules. The US dollar is the base of all macro talk, because a stronger dollar equals weaker markets and vice versa. Dixie has been on a relentless uptrend since mid-July, but as you can see, it's approaching a significant line of long-term resistance. So this is just from yesterday. It's pretty much the same today. I think the dollar falls over the next couple of weeks, and I think the markets bounce back in that same time frame. That said, if the Dixie reverses following a short-term correction, I think a bullish inverse head and shoulders pattern may be in the cards. So this would worry me. I do think and this also comes into play in the ARK Innovation ETF. I won't read through all of this, but this is a somewhat worrying scenario for me, is that the markets rally in the weeks ahead, but then ultimately reverse. Okay? So when I'm talking about the short to medium term, okay, and again, this was a curveball to the short term for Bitcoin, but if I'm talking about just risk assets in general, again, there are always diamonds in the rough. Weight Watchers, Garden, some examples of that in the Waves portfolio at least. I do think that the growth equities will recover over the next couple of weeks. Okay? I do think that. Similar to C3AI, that's why I bought a bunch of calls. I honestly think we bounce nicely over the next couple of weeks. But I am worried about the longevity of this uptrend. And of course, I will explain that in more depth later on. Or obviously in future newsletters and future videos. But right now, I just want to say that I do think from a macro perspective that we probably bounce in the next couple of weeks. And then from there, it's really tossed up. And really that times out to the next Fed meetings and CPI reports, etc. Okay, so just my general thoughts, just my 2 cents. But as always, fingers crossed for upside. And I'm an optimistic guy. I want to see some of my favorite companies and stocks win. But you got to be real. That's just the nature of the game we play. Or I guess that's a smart thing to do in the game we play. So Riot Platforms, again, like father, like son. Apple doesn't fall far from the tree. Riot has also broken a significant line of supports, long-term line of support in place since March 10th. First touch point here. The second touch point is right here. We did just close the day below this line of support, down 10.6%, up a little bit in after hours, but this is not good news, you guys. This is very, very bearish. That said, Riot is extremely oversold. And I've been saying this a lot in the newsletter. It's been oversold for the past few sessions, but right now it's like obnoxiously oversold, you guys. Okay, so we're looking at daily candles right now. As you can see, this RSI, this is more than a correction. This went from extremely overbought levels to extremely oversold levels in the span of about a month, which is crazy. So it's crazy how fast things can happen, but hey, that's the nature of the game, especially small caps and risk assets. So it's nothing surprising, or it shouldn't be surprising, at least to us. Similar to Riot, the downside potential, oversold. Again, you can see here, I can move my fat head. The RSI is right now sitting at about a 28, which is a level that we haven't seen since December of 2022. And if we go to 4-hour RSI, it's even worse than that. It almost can't even render how low this is, because that's just not how the indicator works. But we're in levels that we haven't seen since November of 2022 as far as 4-hour RSI goes. So from an RSI perspective, this is where I'd absolutely swing trade Riot if we didn't just break support. So that's a massive caveat. If we didn't just break a critical line of support, then I would absolutely have bought more Riot calls here. But if I'm being honest, I did not. And I do think downside, again, just given the fact that we closed a day below such a significant line of resistance. Again, you can always make the going against the grain argument, but as a trader, I felt it responsible, definitely not to increase my position on Riot today. And I do think more short-term downside is possible. If that happens, same as Bitcoin, previous resistance will come into play as new support. That would be about a 15% correction over the next week or two. But hey, maybe this is a bear trap once again. Really hope it is. I want to see Riot succeed. And if it is, if we do see some upside, this is going into mid-September. Say we get some good inflation data, good CPI data, just any piece of good macro news, positive macro news. I do think we can make our way back up to test this line of medium-term resistance dating back to the 2023 high we saw in mid-July. Again, if we test that by September 15th, just under a month from today, that would take us up to about $15.50. Okay, so we'll call the video there, you guys. Once again, just some of my thoughts once more on equities. Unfortunately, I can't say the same for crypto specifically. I do think that short to medium term upside is likely. From there, it really depends on what the Dixie's doing, what and what some of the other equity benchmark, some of the other benchmark indices that I track are doing. So again, if you want my daily updates on the markets, if you want to know what I write about Render in the newsletter that I'm going to sit down and write right after I finish recording this video, because Render is holding its ground and I love to see that. If you want to know how I'm trading on a day-to-day basis, again, first link in the description below. And again, if you do join, welcome to the winning team. Times have been slow once again, but it's still a very successful year for WebsCap. We're still way up from where we were at the beginning of the year. And it's important to put that into perspective and remember that, especially when times get slow and sometimes even a bit depressing. So keep your heads up, team. The good times will be back. They always come back. And those who can stand strong through the volatility and weather the storm will be paid for their strength. Okay, we'll call it there, you guys. I appreciate you watching, and I'll catch you in the comments downstairs. Until next time, always remember, take action, make waves. Peace.